All right, so get ready because today we are taking a deep dive into Gensol Engineering.
Oh, interesting.
Yeah, the company that was all over the news a couple years ago,
Uh-huh.
they were like the stock market darling, remember?
Yeah, they were riding that huge wave of excitement about clean energy.
Exactly, and their stock just went crazy.
It did.
Like a mind-blowing 30 times increase in value
30 times.
in just 2 years. Can you imagine?
It was quite a ride for sure.
Everyone wanted in.
Absolutely. The investors were practically throwing money at them.
But then what happened?
Oh yeah, the big crash.
The stock crashes a massive 80%.
Oof, talk about a fall from grace.
Billions, literally billions, wiped out.
Yeah, it was a huge hit to the market.
And now the allegations start flying around, right?
Yep, accusations of financial mismanagement, all sorts of shady stuff.
So today we need to unpack what really happened, like what's going on with Gensol right now.
Right.
And what does this all mean for the future of the company?
Yeah, what is their future?
I mean, we're talking connections to get this, alleged Havilah operator in Dubai.
Oh wow, that's not good.
Not good at all. And then accusations of falsified documents, a company desperately scrambling to regain any kind of trust.
Yeah, it's a mess.
It's a big mess, so buckle up, folks, because this deep dive is going to be a wild one.
Definitely a wild one.
But before we get into all the crazy details, let's take a step back and look at how we got here.
Okay, yeah, let's break it down.
So we have this incredible rise, right?
Right, the meteoric rise, yeah.
And then this sudden, brutal fall.
Yeah, just
from a market cap of almost 7,000 crore.
That's a lot of crores.
To a measly Wu 1,200 crore? Like, what?
Such a huge difference.
Talk about a reality check.
Absolutely.
They missed their own revenue targets big time.
Yeah, they had to slash their FY24 guidance.
From 1,500 crore to just 1,000 crore.
Right.
And then they come out and project this super ambitious Euro 2,000 crore for FY25.
2,000 crore, that's a big jump.
Like, come on, something just doesn't add up here.
It does seem a little fishy, doesn't it?
So even when everyone was praising Gensol's amazing growth.
Yeah, everyone was so optimistic back then.
Were there any warning signs? Anything that suggested maybe things weren't as perfect as they seemed?
Oh, absolutely.
You think so?
Quite a few analysts and investors, actually, they raised some red flags even back then.
Really? What were they seeing?
Well, for one, their debt-to-equity ratio just went through the roof.
Debt-to-equity ratio. Now, for our listeners who aren't financial wizards.
Sure. Yeah, that's a good point.
What does that actually mean?
So basically, it measures how much debt a company is using compared to its equity.
Okay.
And for Gensol, theirs went from a pretty manageable 0.3 in FY21.
Okay, so that's not too bad.
No, not at all.
To a whopping 4.3 in FY24.
Oh, that's not good.
That's a huge jump, right?
Yeah, that kind of increase, it usually means they're growing way too fast.
Expanding too quickly?
Yeah, taking on way more debt than they can realistically handle.
Like building a house of cards.
Yeah, exactly. An empire built on borrowed money, and we know how those stories usually end.
Not, well, so their profits might have looked fantastic on paper.
They looked great on paper.
But the reality was maybe a whole different story.
Oh, for sure.
Like, were they actually making money, cash flow, that kind of thing?
That's the key, isn't it? Cash flow.
So was their cash flow situation healthy?
Not really. It was pretty erratic.
Erratic, meaning?
It was all over the place. Unpredictable.
Even though their operating profits, at least on paper, were going up.
Yep, even with that.
That's a huge warning sign, isn't it?
Oh, yeah, absolutely. For investors, that's a big red flag.
Yeah, because it suggests there's this underlying instability, right?
Exactly. Something's not quite right. Like a mismatch between what they're reporting as profit and the actual cash coming in.
So it's all smoke and mirrors?
Potentially, yeah.
Okay. And then there's the issue of the promoters, the people running the company, their actions. Those raise some serious concerns, right?
Yeah, for sure.
What happened there?
Well, the percentage of shares that were actually held by the promoters, it decreased.
Okay.
At the same time, the number of shares they pledged as collateral for loans, that increased.
That's interesting.
It's often a sign of, well, financial distress.
Like they were losing faith in their own company.
It does kind of look that way, doesn't it?
So it sounds like there were all these cracks in the foundation even before everything really hit the fan.
Yeah, there were definitely some warning signs.
But what was the tipping point, the event that really sent everything crashing down?
I think it was when news broke about Gensol's connection to this company in Dubai.
Oh, yeah, the Dubai connection.
Yeah, it's called Zenith Multi-Trading DMCC.
Catchy name. Very catchy. And they held a significant chunk of Gensol's shares, right?
That's right, a significant chunk.
What's the problem with that?
Well, Zenith, they're linked to this guy, Harish Shankar TL,
Okay.
and he's allegedly involved in this whole Mahadev illegal betting case.
Illegal betting, now we're talking.
Yeah, and he's accused of being a Havala operator.
Well, Havala. I've heard that term before,
Yeah.
but refresh my memory. What exactly does that mean?
So Havala, it's like this informal system of transferring money,
Okay.
often used to move funds across borders, quickly and discreetly.
Under the radar.
Exactly. It operates completely outside of normal banking channels.
Oh, I see.
And sometimes it's associated with the illegal activities.
Yeah, makes sense.
So this connection to Tile and this whole Havala thing, it raised huge red flags for investors.
I bet it did. They must have been freaking out.
Understandably so.
Like, where's Gensol's money actually coming from?
Yeah, what are they doing with it?
How are they managing their finances?
It all became very, very questionable.
But was that the only bad news? Or was there more to come?
Oh, there was more, unfortunately.
Of course there was.
Right around the same time, major credit rating agencies.
Like the big ones.
The big ones? ICRA and CARE Ratings? They downgraded Gensol's credit rating.
Downgraded to cut.
To default, which is basically the worst rating you can get.
Oh, yikes.
It means they think Gensol's very unlikely to repay their debts on time.
So they're basically saying, don't lend them any more money.
Pretty much, yeah.
And what was the reason for the downgrade?
They cited delays in loan payments, which of course just fueled the stock decline even further.
So it was like a domino effect.
It really was.
But wait, there's more.
Oh yeah, there's more.
ICRA also accused Gensol of providing falsified documents.
Uh-huh. Related to their debt servicing.
That's a serious accusation.
Very serious. It raises big questions about their honesty.
Their transparency, their ethics, like everything's on the line now.
Absolutely.
So we've gone from financial troubles to potential ethical issues.
Yeah, it just kept getting worse.
And this whole thing about one of the promoters selling a large chunk of his shares, what happened there?
Oh, yeah, that was interesting.
It was spun as like a strategic move.
Right. Initially, they said it was strategic.
But then it came out that it was actually a margin call.
Yep, a margin call.
Meaning he was basically forced to sell to cover potential losses on a loan.
Exactly.
So the company's saying everything's fine, but behind the scenes,
a different story.
It's all falling apart.
Yep.
So what has Gensol said in response to all of this? Like, how are they trying to explain themselves?
Well, Anmol Singhjagi, he's the CMD of Gensol.
Okay.
He's been very vocal, insisting that it's all just a temporary liquidity mismatch.
A temporary liquidity mismatch.
That's what it calls it.
Due to large projects and their working capital cycle being extended.
That's his explanation.
But despite the default rating, he's also claiming they've already repaid 230 crore of debt.
Yeah, in the first 9 months of FY25. That's what he says.
That seems a little hard to believe considering everything else that's going on.
It does make you wonder.
So what else are they doing to try and regain some trust with investors?
They've formed this independent committee to investigate those document falsification allegations.
So they're taking it seriously.
Seemingly, yeah.
And Jaggi has also promised to buy more Gensol shares himself to show his confidence in the company.
That's the idea.
But is it enough? Like, will any of this actually work?
That's the big question.
So let's get into that. Let's really dig into the solutions they're proposing and analyze whether they have a chance in actually saving the company.
All right, let's do it. Well, one of their main strategies is to try and bring in a bunch of cash.
Okay, how much are we talking?
They're aiming for like a massive 600 crore infusion.
600 crore? That's a lot of money.
It is. It's a huge amount.
But how are they planning to get their hands on that kind of cash?
So they're looking at a couple of ways to do this.
Okay.
First, they're planning to issue what are called foreign currency convertible bonds.
FCCBs.
Yeah, FCCBs.
I haven't heard that term in a while. Remind me, what are those again?
Sure. So FCCBs, they're essentially a kind of debt that can be converted into equity.
Meaning
shares the company at a later date.
Okay, so it's like debt with the potential to become ownership.
Exactly. It's a way to attract investors who are maybe a little bit more, risk tolerant.
They're looking for a potential big upside if the company actually manages to turn things around.
Right. They're betting on a comeback.
So that's one way they're trying to raise money. What's the other part of their plan?
They're also issuing warrants to the promoters.
Warrants, now what are those?
Warrants are basically like they give the promoters the right, but not the obligation
to buy
more shares at a set price in the future.
So it's like a a special option to buy stock later on.
Yeah, it's like a little bonus for the promoters if things improve.
But is all of this, like the FCCBs and the warrants, is it enough to actually deal with their mountain of debt?
That's the big question, isn't it?
Like we talked about their debt to equity ratio being crazy high.
Very high.
So taking on even more debt, even if it's convertible, is that just going to make things even riskier?
It's a gamble for sure.
Yeah, and if the company doesn't perform well, those warrants the promoters have might not be worth anything.
Exactly. They could end up being worthless.
Which would just make investors even more nervous.
Yeah, it's a risky move.
So it sounds like they're really walking a tightrope here.
They are, definitely.
And they're also looking at selling off some of their assets, right?
Yes, they've announced plans to divest some key assets.
Like what kind of assets are we talking about?
So they're looking to sell 3,000 electric vehicles from their leasing fleet.
Okay.
To a company called Reflex. And they also want to sell their U.S. subsidiary, which is called Scorpius.
And they're hoping to get how much from these sales?
They're projecting over 650 crore.
So a nice chunk of change.
Yeah. Could really help them pay down some of that debt.
But have they given any details about the timeline for these sales?
Not really. The details are still pretty vague.
Or who might actually buy these assets?
Also unclear at this point.
And even if they do manage to sell them,
right,
it's just a one-time fix, right?
It is. It's not a long-term solution.
Like putting a Band-Aid on a broken leg.
Yeah, it's not addressing the root of the problem.
Which is their questionable business model.
And those corporate governance issues we talked about.
Okay, so what about the stock split? They announced that too, right?
They did, a 1.10 stock split.
What's the thinking behind that?
So a stock split, it basically means they're dividing each existing share into 10 shares.
So more shares, but each one is worth less?
Exactly. It lowers the price per share.
Makes it seem more affordable.
Yeah, more accessible to smaller investors.
So it's a way to try and attract more buyers.
That's the hope.
But does it actually change the value of the company at all?
No, not really.
Like cutting a pizza into smaller slices.
Exactly. You still have the same amount of pizza, just more pieces.
So the total value stays the same?
Yep.
It's more like a cosmetic change?
Yeah, a bit of a marketing ploy.
Okay, so let's go back to those corporate governance issues, because those seem to be at the heart of this whole mess.
Yeah, they're a big problem.
They've put together this independent committee to investigate the document falsification allegations.
They have.
But is that just a PR move, or do you think it'll actually be effective?
It's hard to say for sure, but it's a step in the right direction.
I guess we have to wait and see.
We do.
Like, how independent is this committee really?
Yeah, that's the key question.
And how thorough will their investigation actually be?
It needs to be more than just a show.
Investors are going to be looking for real accountability here.
Absolutely. Transparency is crucial.
The market's watching very closely to see how Gensol handles this.
They are. This could make or break them.
Okay, so we've talked about their financial struggles, their attempts to fix them, and these serious corporate governance concerns.
Yep. It's a lot to unpack.
But I'm also curious about their actual work in the renewable energy sector.
Right. What are they actually doing?
What can you tell us about their operations?
So Gensol, they have 3 main business segments.
Okay.
Solar engineering, procurement, and construction. We call that EPC.
EPC. Got it.
Then there's electric vehicle leasing and EV manufacturing.
So they've got their fingers in a lot of different pies.
They do. They're quite diversified.
Where do they make most of their money?
Their bread and butter is their solar EPC business.
Okay, so building solar projects.
Yeah, designing, procuring materials, and constructing the actual solar plants.
They've been involved in some pretty big projects, haven't they?
They have, and they claim to have a 7,000 crore order book.
7,000 crore. Wow, that sounds impressive.
It does, but we have to remember what we talked about earlier with their cash flow and debt issues.
Right, so a big order book doesn't automatically mean they're actually making money.
Not necessarily, especially if they're having trouble executing those projects.
It's one thing to have contracts, it's another to actually get the work done and get paid.
Absolutely.
And there are some other red flags about their order book too, right?
There are, almost half of those orders were secured just in the last quarter.
That seems a little suspicious.
It does. It raises questions about whether they were trying to, inflate the numbers.
Make themselves look better than they actually are.
Potentially, yeah.
And they've also admitted that a lot of these projects are stalled.
They have. They're facing problems with land acquisition.
So delays and roadblocks.
Yep, which is definitely not a good sign.
Especially considering their ambitious revenue targets.
Right, those targets have been all over the place.
First, they were projecting 1,500 crore for FY24. Then they had to slash it to 1,000 crore.
Yeah, and now they're saying a 2,000 crore for FY25.
Talk about a roller coaster.
It's hard to know what to believe at this point.
Okay, what about their EV businesses? How are those performing?
Their EV leasing business has been struggling.
Not surprising, considering they're trying to sell off part of their fleet.
Right, and their EV manufacturing ambitions, those are still in the very early stages.
They're still developing a prototype, right?
Yeah, and scaling up production, that takes a lot of money, a lot of investment.
Which might be tough for them right now, given their financial situation.
Definitely a challenge.
It sounds like they're trying to do too much too quickly.
Spreading themselves too thin.
Especially when they already have all these other problems to deal with.
It's not a good combination.
So what about the CEO, Anmol Singh Jaggi?
Yeah, what about him?
He seems to be the face of the company, the one making all these promises.
He is very vocal, very charismatic.
But his actions, especially selling off his shares and then trying to explain it away,
Yeah, that didn't look good.
it doesn't really inspire confidence, does it?
Not really. It makes you wonder about his true motivations.
Is he really in it for the long haul?
That's the question.
Or is he just trying to save himself?
Who knows?
Only time will tell, I guess.
I guess so.
It's a make or break moment for him, and for Gensol.
It really is. The stakes are high.
So what are your thoughts on Gensol's future?
Well, I think this deep dive into Gensol has revealed some really important lessons about investing in the renewable energy sector.
What are the key takeaways here?
It's all about doing your research, not just getting caught up in the hype.
Easy to say, hard to do sometimes, especially in a hot market like renewable energy.
It is, but it's crucial.
So what specific factors should investors be paying attention to when they're evaluating companies in this sector?
Well, first and foremost, look at their financial health.
The numbers.
The numbers.
Yeah.
Don't just focus on the revenue projections, dig deeper.
Okay, what should we be looking for?
Look at their debt levels, their cash flow, their profitability, their history of meeting their financial obligations, all of that.
Makes sense, like checking the foundation of a house before you buy it.
Exactly. You want to make sure it's solid.
What else is important?
Corporate governance is huge.
So how the company is run, how ethical they are.
Yep. Look for signs of transparency, accountability, ethical practices.
Okay, so it's not just about the numbers, it's about their values.
It's about the whole picture.
What about their business strategy?
That's another key factor. Do they have a clear, well-defined strategy for growth?
Like, where are they going? What's their plan?
Are they focusing on a specific niche? Do they have a realistic plan for expansion?
Are they keeping up with the changes in the industry?
Are they investing in innovation?
So it's about being forward-thinking.
Absolutely.
And being able to navigate this complex and rapidly changing market.
It's a dynamic market, that's for sure.
Sounds like due diligence is more important than ever in this sector.
It really is.
You really have to do your homework.
Yeah, you got to dig deep, separate the wheat from the chaff.
Because the rewards can be great.
They can, but the risks are also high.
Well said. This deep dive into Gensol Engineering has been quite the eye-opener.
It has been fascinating.
A story of ambition, setbacks, and a company fighting for its survival.
A real roller coaster.
So what's your final thought for our listeners as we wrap up this deep dive?
I think the key takeaway here is that even in a promising sector like renewable energy, caution and critical thinking are absolutely essential.
Don't get swept up by the hype.
Exactly. Do your research, ask tough questions, and invest wisely.
Because the future of clean energy, it depends on supporting companies that are both financially sound and ethically responsible.
Well said.
It's a reminder that responsible investing isn't just about making money.
It's about building a sustainable future.
Thanks for joining me on this deep dive.
It's been a pleasure.
And to our listeners, keep exploring, keep learning, and keep asking those tough questions.
That's right.
We'll be back soon with another deep dive into a topic that's sure to spark your curiosity.
Looking forward to it.
Until then, stay informed and stay engaged. Yeah, it really makes you think, before you jump into any investment.
It does. You really got to look beyond those headlines, those promises.
Do your homework, right?
Exactly. Dig into their financials, how they're actually run, their strategy, all of it.
Gensol's story, it's like a cautionary tale, isn't it?
It is. It really shows you how easy it is to get caught up in the hype.
I mean, I can see why investors were so excited about them at first. The growth was incredible.
Oh, yeah. They were promising to, revolutionize clean energy. Everyone was buying it.
They were riding that wave, that big renewable energy wave.
Absolutely. It's a hot market. Still is.
But as we've seen, not all companies are created equal. Some are definitely better than others.
That's where the smart investors come in.
The ones who do their research.
Yeah, the ones who ask the tough questions look beyond the surface.
Speaking of tough questions, I'm curious about your take on the CEO, Anmol Singh Jaggi.
Oh, Jaggi. Yeah, he's a bit of an enigma, isn't he?
Some people see him as this visionary leader. Others are way more skeptical.
He's definitely charismatic, very ambitious, no doubt about that.
He's not afraid of the spotlight, that's for sure.
And he's been very vocal, defending the company, laying out his vision.
But actions speak louder than words, right?
They do. And some of his decisions haven't exactly inspired confidence.
Like selling off his shares right before everything hit the fan.
Yeah, that raised a lot of eyebrows.
It's hard to square that with his claims that he, believes in the company.
It creates a perception problem, for sure.
Investors want to see that the leaders are aligned with them, that they're in it for the long haul.
Absolutely. Jaggi's actions, unfortunately, they've fueled that skepticism.
Makes you wonder about his true motivations.
It does. Is his vision really for the company, or is it, something else?
I guess that's a question only he can answer.
It is, but ultimately he'll be judged on results.
Mm-hmm.
Can he turn things around?
Can he restore trust? Can he deliver?
And that's what matters.
It's a pivotal moment for him, for Gensol.
It is. They're at a crossroads.
The next few months, they're going to be critical.
Absolutely. They need to make some serious progress.
On their financial recovery plan.
Proves that they can be transparent, accountable.
Show that their business model actually works.
It's a tall order.
They've dug themselves a pretty deep hole.
They have. It's going to take a lot of effort to climb out.
It's a story of ambition, definitely.
And risk.
The consequences of growing too fast, too recklessly.
A cautionary tale, for sure.
Reminding us that even in a sector with so much potential, like renewable energy, you can't just throw caution to the wind.
Due diligence, critical thinking, those are essential.
Always.
No matter how exciting the opportunity might seem.
Well said. This deep dive into Gensol Engineering, it's been fascinating, a little bit scary.
It has.
But ultimately, I think, hopeful, right?
Yeah, I think so.
There's still potential for them to turn things around.
There is. They're not finished yet.
And for the whole sector, renewable energy, it's still vital for the future.
Absolutely. We need companies like Gensol to succeed, but they need to do it the right way.
The ethical way, the sustainable way.
Exactly.
Well, thank you so much for sharing your insights with us today. It's always a pleasure.
The pleasure was all mine.
And to our listeners, thank you for joining us on this deep dive. We hope you found it informative, thought-provoking.
Keep those questions coming.
And keep exploring this amazing world of renewable energy because the future, it depends on all of us.
It does.
We'll be back soon with another deep dive, another fascinating story. Until then, stay curious and stay informed.